Welcome back. You're watching Breaking Bad Debt, our special coverage of the new plan that is getting ready to fight NPAs. We were speaking to PS Jayakumar, the MD and CEO of Bank of Baroda, who was a key member of the panel. And Jayakumar was just telling us that it's not just 2 months within which the AIF has to buy. The AIF, he was telling us later, could also buy a bid in the NCLT to buy distressed assets. But how long will it take to put together an alternate investment fund? As I was saying, the NIIF for the last 4 years has not made any investment. As well, an AMC, how well will it work? Can all the sellers aggregate and all the buyers aggregate that easily? To discuss this, we are joined by now more the private sector participants, Jayesh Mehta, Managing Director and Country Treasurer at Bank of America Merrill Lynch, Abhizar Devanji, National Leader, Financial Services at EY, and Chairman of Edelweiss ARC, Sibi Anthony, also being joined by B.V. Krishnan, CEO of KKR India Financial Services. Gentlemen, thank you very much for joining us. Krishnan, I'm starting with you because everyone wants you to join the fund. Will KKR be willing to put in some money in the AIF?
Yeah, hi, Latha. Look, a good question. I think the question is obviously not only for us, but for the broader market on the private sector on whether this is an interesting structure and an opportunity. I think as we all agree, the NPL's opportunity obviously exists. I think the structure which is proposed, which is you create a fund, the fund picks up assets, quote unquote, at the right price, is actually able to resolve nurse companies, make upsides. And if banks are participants in the AIF as investors and LPs, they benefit from the upside. I think that construct makes a lot of sense.
Okay.
The proof of the concept, though, will really come up when we think about what is the right price and how do you discover it. That's the first question. And what is the process that precedes even the price discovery in terms of creating the right data room, the amount of information needed for due diligence. So you're actually able to make a fair price. And that is necessary because if you do not have sufficient information, the buyers will always try to bid lower because they do not have sufficient information.
Okay, Krishnan, 1 minute. Just before we started chatting in the break, Sibi Anthony and Abhizar were telling me that they have been doing roadshows to try and raise funds for the Edelweiss fund, but it's not been very easy to make funds bite. Sibi, what has been the experience? If assuming the government sets up a sponsor, I don't know what the first step will be, assuming two banks get together, put a JV and a sponsor, what will the funds demand? How easy or difficult will it be to get a fund to invest?
See, any fund look for return. See, all over the world, I mean, if you look at distressed assets, it's a risky
No, it's
area.
high risk, high return.
High risk, high return. So they look for high return. In dollar terms, every sovereign fund, every pension fund looks for maybe 15–16% dollar return, which means you need to make around 22 to 24% gross return here.
Okay.
Okay, so
what is your best guess that this AIF of the banks of India will be able to raise money?
If you want to raise foreign funds like pension funds or sovereign funds, it would take 6 to 9 to 12 months easily. Easily.
Okay. Jayesh, when we spoke to you earlier in the morning, you were talking about some tax issues also, right? There's a tax expert who had written to me saying that this alternate investment funds does not enjoy tax pass-through treatment under the income tax on business income. It is limited to only capital gains and other income. Will these be issues? I don't understand them very clearly, but will this be a big hindrance?
No, that is secondary. I would say I think the whole construct is good because I think today the decision making was told by the banks. That will, at least with this structure, that is the number 3 AMC and the number 4 the trading platform, that will at least resolve that. I think there are two kind of investors which we are looking at. If we are looking at purely only sovereign fund, then we are narrowing our stuff to limited investors from the offshore.
No, I don't think they have said sovereign funds, right? I think they will ask even KKR, for instance.
Yeah, but then a lot of these sovereign funds also put into fund managers, right? So when the fund managers are putting it, when they are managing distressed asset, they would like to do their due diligence. They would like to cherry pick the asset. They would like to, it's like, it's just giving an example of equity, right? The fund manager would like to manage his own portfolio rather than giving it to fund manager who's managing here and he decides the funds to be bought. So I think that second part needs to be streamlined a lot. We still need to see the detail.
Okay.
But that second part is very, very important.
What is your sense, Krishnan? Would KKR rather manage their own, have a bilateral deal with some of the banks, rather than allow some other fund manager to manage your money?
Yeah, I think the questions, Latha, are kind of slightly different in the sense. The first thing is, why do banks need to be the sponsor or manager or create an AMC on their own? There are enough funds out there at the margin, right? So, for example, can KKR set up a fund specifically for India if needed with exactly the same construct? The answer is probably yes. The question, therefore, to your point, is really not whether we will give money out to another AMC, but really why do banks, as you rightly pointed out, NIIF for the last 4 years has not necessarily gotten a lot of traction. Part of the reason is questions around what is the exact governance structure for a fund like this. So if it is truly meant to be managed by private sector, let the private sector do that. Let the banks be LPs and investors so they can benefit from the upside, but leave it to the private sector to manage, resolve, nurse, and make real equity from the investment.
Krishnan, I think they waited 4 years to see why all these vulture funds are not buying assets. We have not seen any deals. 3 years ago, I have heard the same language with Arundhati Bhattacharya and Sanjay Nair in this very same studio. But, nothing has happened. Private funds, vulture funds have not come and bought, nor have banks approached them. So maybe the government is trying to pay catalyst. You tell me, Abhizar, what should be the first step? So far, we have not seen any one asset being sold to any vulture fund. The banks have not got together, nor have they done it bilaterally. What is your sense? First, tell me, what will be the first step? Who will sponsor this AIF?
There are 2-3 things which have impacted. Yeah, so there are 2-3 things. So who will sponsor this AIF? I think it has to be outside funds who need to come in. Because I think why outside funds need to come in is because they need to authenticate and have a right pricing. So let me just step back and say, why have deals not happened? And maybe you will find some of the answers in the current Shashak structure. 3 issues, in my opinion, have impacted bad loans not being sold in the economy. One is, and the biggest problem, is aggregation. We've never been able to sell debts in the aggregate. We've always had individual banks having their own nuances, whether it is 60 by 50, whether it is 100%, whether it's whatever. We've never had all the banks vote in unison. That's one. Secondly, we've never had the kind of processes that we have had where people can trust a particular process and say that this process will eventually come out with an outcome. As in, they would spend 6 months, 8 months on a deal with no surety of an outcome. And that, frankly, makes people wary of investing time. And lastly, is the fact that, let's admit it, we have limited skill in the game. Our current custodians of these bad assets do not have the ability to maximize their own returns, because we've never faced a situation of this magnitude in our country before. So if you put these 3 things together, and I'm leaving aside the usual CVC, CBI kind of arguments. I'm saying if you just get these 3 things on the right platform, we should be able to manage better.
No, I've still not understood. I have not still understood what will be the...
Who will invest, who will not invest, and how long will it take?
Abhizar, I have still not understood who will make the first move to set up the AIF.
So I think the banks who are the holders of the assets have to collectively make this move. Whatever was envisaged, I was involved a little bit in the preparation of this. What's envisaged is that this structure will not be a government structure. It will be like the NIIF, an independent structure. It will have the investors having their own investment committee, which is obviously external capital, who will then make sure that the pricing that this particular AMC comes up with is realistic and offers as a floor to enable others to bid for these assets. Now, I agree there's a disconnect on the timing that will take for it, but I do believe that it will take lesser than what the private sector takes to raise money. It will be quicker than that. And also, what is
where is the asset getting aggregated? You have still not answered.
India today,
that aggregates the buyers. How does it aggregate the sellers?
The asset aggregation will happen via a mandate to the AMC. So the 200 accounts will be mandated to the AMC in terms of running a process, and that is where all the banks will have to agree. And that agreement, I think, is going to be coming about because there is a platform in existence. Don't worry, don't forget, in India, if there is an institutional platform available, sponsored by the government or with the permission of the government, I think there is a lot of buy-in to agree to that process. You know, so we don't want to go and clog the NCLT with everything. And that is a platform which can also offer aggregation.
Okay. Okay, Krishnan.
Well, it's a try.
Krishnan, quick thoughts on this.
For a lack of a better solution.
Krishnan, quick thoughts on this. Do you think the sellers of the assets will aggregate it with the AMC and the buyers will aggregate themselves at the AIF and the deal will happen? Any thoughts?
Look, I think this is, Latha, the first step of creating this structure and the construct is, I think, the right one. I do believe there will be more changes. It's not going to be straightforward. Will actually the sellers aggregate? They need to, but we'll have to see as we go along whether that process frankly works or not, right? If it works for one asset, I'd be very happy. And then raising money and aggregating more people to give in, more capital for it is far easier. So I personally think it's really down to execution on at least one or two assets. Otherwise, it's fantastic on paper in terms of the outcome of the structure. Not very easy preceding the outcome. What is the process? How do you aggregate? How do you find fair value? Is there still going to be more capital holes with banks? And how all of this, frankly, as it muddles through the next several months, how does it really help banks come back to lending? Because that was one of the objectives, right? If you do this asset by asset for even 200 accounts, that's a lot of accounts, a lot of banks, a lot of data to pull together, a lot of processes to run. In the meantime, the mid-market company in India still does not get money from banks, which is the issue. That's not exactly going to get solved overnight.
Oh, exactly. And it doesn't look like the AMC AIF process will also be put in so quickly that banks will, some bandwidth is released for banks to start lending. Or even for that matter, they get capital to growth capital. Several questions here. We are going to take a quick break and come back with our guests to discuss further what will be the hurdles and the potential success rate of the newly proposed AMC AIF model by the Sunil Mehta Committee.